Well, Rio Tinto denies it's made any final decision, but the proposed iron ore joint venture with BHP Billiton in the Pilbara looks increasingly likely to hit the buffers. The plan, the biggest in Australian corporate history, was hatched last year when Rio was deep in debt and iron ore prices were way off what they are now. Publicly, Rio Tinto says the venture is still alive, but an extraordinary leak from Monday's board meeting suggests they're about to walk away. Here's Philip Lasker.
Headlines like this did not come as a total surprise to investors.
I think both companies may, in unison, decide to say, look, it's just too hard, we're not going to get approval, so let's just call it quits now.
A report from an extraordinary boardroom leak said Rio is preparing to dump the $120 billion iron ore joint venture with BHP Billiton in West Australia's Pilbara. It quoted boardroom discussions canvassing a strategy for walking away from the joint venture deal that would not anger or embarrass BHP.
Taken at face value, the reports would indicate extraordinary breach of boardroom confidentiality, and I find that astonishing in a company as professional as Rio.
In a statement, Rio Tinto said it had not made any final decisions about possible outcomes or next steps, but the board acknowledged recent communications from regulators that indicate potential obstacles to achieving clearance for the joint venture. The ultimate customers, steel mills in China, Japan and Europe, have lobbied regulators, fearing Rio and BHP will control global steel prices.
The poor old steel mills are making very little money. The iron ore industry is making record margins. And I think at the end of the day, the steel mills have got a very loud voice in Europe. And I think the EU will just simply say no.
Some Rio shareholders are also saying no because the company is no longer drowning in debt and surging iron ore prices have made its business much more valuable. So they see the $5.8 billion equalisation payment Rio was to have received from BHP as part of the deal as too little.
We would suggest the payment probably needs to be closer to $10 billion now, given what's happened in the iron ore environment in the last 18 months.
As the two parties have moved on in different directions, it would suggest that the gulf between them in terms of the equalisation payment has become increasingly an issue.
Despite this morning's report, analysts say it's unlikely Rio will dump the deal because it'll be hit with a multi-million-dollar break fee. Allowing regulators to block the proposal will prove much more convenient for both companies. There is, of course, the alternative of simply waiting until the deal expires at the end of the year. And an arrangement with the West Australian government already in place would allow some degree of cooperation without the regulator's approval.
What's not clear is how much of the purported $10 billion in synergy that was to come out of the joint venture has been realised as part of that change of arrangements with the West Australian government.
UBS estimates it could be at least $6 billion in savings.